Welcome to the new video. So today's video will discuss about a interesting thing, which is how stock prices move. So stock prices क्या होता है कि every stock moves differently, and if you go and check the technical patterns, you will see that every stock has a different kind of movement. Some stocks go linear. If one stock is going up, you will see it is going in a linear fashion, and some other stocks are going in a zigzag fashion, that is in a volatile manner. So every stock has different volatility associated with them. So that volatility comes both from the underlying sector that the stock is and the operator that is working in the stock, or the shareholders, and the leverage that people in the stocks are having, and the kind of market that is that the stock is or was currently in. So there are multiple factors which stock prices got affected by, but to make money in the stock market, we have to find, or you have to have some edge over the other. The edge, what I think, in terms of knowledge, is to have the ultimate destination of the stock. The ultimate destination comes from the knowledge that we can have about the company and its earning and its finally what the growth and up to what time the growth can sustain. That's what we need to have a rough sketch in our mind. Say company is growing at 50% on a particular base, say 10,000 crore market cap. We know the growth of 50% cannot be sustained over a very long period of time. It may be sustained for 3 to 4 years, or maybe 5 to 6 years also, but it cannot be sustained for say 15 years. There may be exception, but it is very unlikely that the growth of 50% can be sustained for 15 years. So at 50% growth rate, you will find the stock is very expensive. Sorry for the interruption, guys. One phone call came. So I was speaking at 50% growth rate, you will find that the company is very expensive. Say it is trading at around 90p. Yeah. With 50% growth, it probably will be trading at 90 or 100 at least. We need to find a suitable opportunity to buy the stock at a discounted price, say 60 or 70p. Now the question is how the opportunity will come. Opportunity will come whenever external event will force the market to go down, say Trump tariff, say COVID, say Russia-Ukraine war, or maybe some commentary from some very prominent person in the economy or the country, a negative commentary, and that may cause the market to temporarily go down. There you may find an opportunity to buy the growth stock at a very cheap or low P. There comes the main part. Then you don't need to do anything. Then you need to only hold the stock. And about the ultimate endpoint, what I was talking about is like you know it will be growing at 50% for 3 years, maybe 40% for 2 years, 30% for next 2 years. There you do the calculation. Say 1.5 into 1.5 into 1.5 into 1.4 into 1.4 into 1.3 into 1.3. There you know how much times the stock prices can go up. But also we know that P of 90 won't be there forever. Say when the growth will come down to 20%, the P would eventually go down to say 30, 35. So stock prices will cut by 1/3. But the growth of that 50% and 40% for 2 years and 30% for 2 years will take the stock to say that we had calculated. It will just get the calculation done, right? I am not able to calculate it in my head. So you may find the calculation to be 6. That multiplication will go to 6. So 6 by 3 is 2. The stock price will double. So if you are able to buy the stock at a low P, say 50 or 60, then what happens is that when the stock comes from 90p to 30p, your prices will go down by 1/3. Go down to 1/3 because of P contraction. But if you are able to buy the stock at low P because you bought it on a very on a event which make them stock to go down momentarily, say 60p, then your stock prices will go to only half because of P contraction, and because of earning it will go to 6 times. So 6 into 1 by 2 equal to 3. So stock prices will triple or go to become 3 times in that period. So that is how you need to have so market cap will become 3 times. Say 30,000 crore it will become. So that is how you need to have a rough calculation in your head. And if you just follow the stock price movement or chart, it will always confuse you, because stock market is an auction driven market. Here people actions are driven by both greed and fear. They overreact. When the stock prices go up, they cheer, and when it go down, they are very fearful and always thinking whether the prices will come up or not. And they in that fear, they eventually sell the stock at a very cheap price, and there when the institution buy the stock at a very reasonable price or discounted price. So you don't need to follow the stock prices, you need to follow the company, whether it is going it is giving the earnings that it has say guided for in their con call. There you can able to track the company, and you can be sure that we are on the right path, because stock can double in 2 months, but you have to hold the stock and wait for the period. You don't know when the period will come. Wait for the period, and so you need to hold the stock and wait until when the actually people are frustrated and get out of the stock, and there the stock becomes a stock gets ready to move. That's what happens in the stock market, because there is a proverb which says everybody cannot be winner at the or everybody cannot be rich at the same time. This is why when everyone buys the stock does not go up, because stock will go up only when an incremental buyer will come and buy the stock, and it will take the stock up. So you have to be very you have to have conviction in your mind that stock will go up because the earnings are coming. So When the earnings will come, stock will become cheaper and cheaper with gradual earnings. And one day when the people are frustrated because they will see that the stock prices are not, stock is not going up, they will think that maybe something is wrong with the stock. That is when the actual movement will start. So conviction is the main thing that you need to have after buying the stock and before buying the stock. And the calculation that I have discussed needs to be there in your head, because without that conviction, without calculation you cannot have conviction, without conviction you cannot hold the stock. And when you are able to hold the stock in the tough days, then only you can reap the benefit when the stock will go up. So thank you guys, and मिलते हैं next video में.